Good morning, traders. Chris Buss here with your morning look at markets for Tuesday, June 29th. It's 6:12 as I'm starting the video. Welcome to any new viewers to the channel. Really appreciate you being here, spending some time. Hopefully I can give you some good information, set you up for a good trading day. Taking a quick look at futures, gold, oil, and copper are all down. Nat gas is up by a little bit. Equities are flat. On the macro front, we don't have a lot going on today. We've got Redbook, Case-Shiller Home Index. We've got a consumer confidence number. And as I mentioned yesterday, we've got Fed speakers all this week. And in the crosshairs for later in the week, we've got a big OPEC meeting, which I believe is Thursday. And then we have the big jobs report on Friday morning. That'll give us a read on the June jobs picture. But yesterday, we saw yields fall. We saw 5-year break-evens fall. And taken together, that means the real yield was rising. That's a bad environment for gold. And it's more or less a bearish environment or neutral at best for, cyclicals, financials, the reopening trade, and bullish tech. So, we've seen this whipsaw quite a number of times. I've said in the trading room, and I think I even mentioned it to you guys. It seems like if the Qs are working, IWM is not going to be working. Why? Because IWM is loaded with the reopening trades, the financials, cyclicals, industrials, energy. Those sectors are not going to work when yields are falling, and they're going to be a tailwind for tech. So yesterday we saw that with the bubble stocks, the solar stocks, EV stocks, mega cap tech, all software, all that stuff was working yesterday, while IWM and things like the airlines, the cruise lines, energy all got killed. So, and it's been tough. If you've been trying to, where should I be? Cyclicals, reopening, value, or should I be in tech? So I really think the answer is both. And of course, time frame is everything. If you're trying to do something on Monday for Friday, that's totally different than saying, where do I think things are going to be in the third and fourth quarters of this year? And remember, tomorrow marks the end of the second quarter. We may even see some, that end of quarter markup on prices heading into tomorrow, into the close. But setting that aside, do I think the reopening names will do well? Yes, I do. I think the earnings outlook and sales in those sectors will only grow. I think that's going to be a good backdrop. But I think tech is going to do well also, as long as rates don't take off. So now we're back below 150 on the 10-year, in that sweet spot between 140 and 150. That's right where we want to be as far as tech. And it's not only big tech, but it's and don't take offense to this, but junk tech. And what I mean by that is, bubble stocks, big dreams, no profits, very high sales to price ratio, no earnings at all. All that stuff is going to work in a low interest rate environment. So pick your spots, but I don't think you should abandon one or the other and commit to some kind of narrative. If we see rates start ratcheting up, it's going to throw the brakes on tech. if we see rates, wander between 140 and 150, tech is going to outperform the cyclicals. So, you got to decide what kind of mix you want in your portfolio, whether it's going to be, all one or all the other, or just recognize that if you've got a tech and cyclicals, they're probably not both going to work on the same day. So that can be a stabilizing influence on your portfolio, that you're not, wildly green or wildly red on any particular day. So let's go through the indexes, then we'll jump through FATMAAN, and then we'll review some trades. SPY 2-hour grinding higher. We're near the top end of the range of this rising channel. We are a whisker away from our 428 measured move target, coming off this double bottom low back in May. So we're almost there. I think there should be some caution. If we get up into the top of this channel, the channel boundary is there for a reason. You visit it, you can walk along it for a long way, but eventually you're going to come off and revisit at least the center line of the channel. So be aware of that as we get to the top of the channel. Yesterday on the 30-minute chart, here's the exploded view. SPY was just kind of doing nothing most of the morning, and then in the afternoon really took off, and we're up here on the 30-minute chart. I've got a line drawn, support here, turning into resistance up here. We'll see if price can pop that on the short-term time frame. Keep in mind, we do have some gaps below, but as far as today, I would think 426.50 would be a good short-term pivot for you active traders. Stay long north of that. If it breaks below, you may see a run back down to 426 and even possibly to test the top of this gap. My posture remains, look for long entries, not for shorts at this point. We don't have any evidence of a confirmed sell signal at all. So be careful about trying to, pick tops and be the first guy into a short that works. That's been a losing trade for quite a while. So if you get tentative or feel uneasy being long, that's fine. Just step aside and wait for the things that you want to see to get either long or short. It doesn't mean that as soon as you back off of your bullish stance that you got to go gonzo bearish. Maybe sit aside for a consolidation or whatever. But I don't see any outright sell signals. We do have bearish divergences that we've been pointing out along the way, but those are yellow flags. They're not red flags. So here on the QQQ 2-hour, nice day, up 1.21%. We had a gap, then we broke above this 352 and finished the day on a high note. We are well within this rising channel. I think the goal now, if you were going to set a technical objective, is to see if price can recapture this midpoint line of the channel. Notice top half of the channel, drop down below, now bottom half of the channel. And that's what you'll often see, is that this midpoint of a channel often acts as support or resistance. So if price can get above or recapture this midpoint line, then that will bode well, because it would then favor a run to the top of the channel and then have price stay in the top of the channel for a little while. What would concern me on the 2-hour is if we dropped out of this channel and started filling these gaps. That would be a short-term sell signal. or at least a place to step aside some of your longs and take a more cautious approach. Because once you break the channel, then, by definition, you're not rising anymore. So may come back into here, into 347, 346, gather itself, and then go back up. But right now, I don't see any issues. 30-minute chart, gap up above the midpoint. I mean, it looks fine. I would stay long against 352 if you're actively trading. And if you got that pullback, I think that would be a place where you try to hit it long if you weren't in. If it drops below, probably going to come down and test the top of this gap. As we mentioned yesterday, IWM getting a little wobbly here as tech takes the lead. This was a steep run here, and we shouldn't be surprised that this, could not maintain that. It dropped out of the channel, came down to tag this 229, where it eventually gathered itself. Here was the channel. We dropped down. Yesterday we said if you wanted to take a tactical short below 232, you could certainly do that. You got more than you bargained for, because I thought it would. This was first support here at 230 and a half, but it cut right through that and went to 229. So all in all, if you took that short, it turned out to be an easy trade. Why? Because there were no shakeout candles. There were no big bounces. It just kind of faded right out of the gate and came down here to support. I've dropped on the fib retraces in this gold color, and you can see that off of this swing low here to the swing high, we pulled back 50%. And that's that very common halfback move that we often see after a strong advance or a strong sell-off. Get that pullback or bounce to the halfway point. And we had all this support back here as well. So the halfback and key support all lined up here right around 229. Now this morning, if we can break above 230.50, I think you can be long and look for 232. But if this rolls over here, probably comes right back to 229 to test this prior low. And then certainly if this level fails, where all this support is, I would be short and look for 227 and possibly lower if they really go after the small caps. Moving on to Fatman. Facebook, what a day. Really wasn't doing much. Actually, I got the daily here. Let me go back to the 60-minute chart, because this is the one we were working off of. We were down here. We talked about the $8 range. We talked about the breakout. We talked about price being pinned down below 344. And late in the day, we got that breaking news, that the FTC had filed some kind of complaint against Facebook, and the judge threw it out. So that was a huge catalyst. Straight up moonshot. If you were in it, you probably made you definitely made your week. You probably made your month, depending on, how loaded you were. But even if you had an alarm and you were able to jump in, you had a very nice trade. Now, looking at it today, what I like to do on these impulsive moves is put the fibs on and expect some profit taking from these guys, people that got in. Try and see if there's some profit taking to come back and give back 50% right back here to 350. I think that would be an interesting spot to take it long, but recognizing that you'd have to set a stop just below in case they they decide to bring it all back to 344. And if they do, I would hit it long at 344 because you've got this support cluster here. Now, I wanted to show you on the daily where we were at. Came out of a big consolidation into this rising channel. Here was the little consolidation that we had been watching. That's that $8 range. And then we got the breakout, and we're right up here to the midpoint of the channel. So here, as we've seen, the midpoint can act as resistance. So we may get a pullback here. But if we break out, then you can have this 355 and the midpoint of the channel act as your support layer and guide you on your stops. Because if it breaks above, we could go all the way up to the top of the channel for a tag and then spend some time up here in the upper half of the channel. So, I mean, Facebook looks really strong after that news. Apple looks strong. We had a big impulsive bar and then spent the rest of the day in a bull flag mode. So now, today, on a break above 135, you can get long, and then your measured move is taking this distance here from, let's just call it 133 to 135, and then extending that move, that $2 move, to 137. And then here it is on the daily chart. We haven't quite taken out, is that refreshed? Should be. Yeah, we're at 134.78 right here below this resistance level. If we take that out convincingly, then we're going to go up to this 138, and as we've been discussing, then the breakout there would be open a path to retest the all-time highs up at 144. So all in all, Apple looks good. Tesla had a good day. Impulsive move up to resistance at 690. It's got to pop that for 710, and then you've got a gap up here, 730 to 745, that has yet to be filled. So stair-stepping its way up. If you're in it, stay long. Of course, time frame is everything. We talked about over the prior days, the daily chart breaking out above this downtrend resistance and opening a path up to 760. So on a daily time frame, that trade still looks really good. Microsoft had a great day too. Gap up, broke above this 267 prior high where it had trouble on Friday, took that out, and then made a move higher towards the end of the day. Got a lift, maybe in sympathy with Facebook. But at any rate, this looks like another bull flag and then a breakout, probably looking for something towards 270 at the end of the week if everything goes according to plan. Now, if today you got a pullback into 267, I would hit it long. Why? Because you've got a multi-day consolidation between 267 and 265. I would expect 267 to hold. If it doesn't, in your ultra short-term trader, you may see this pull back into this gap and either test it or fill it, and then we'd be back into this $2 trading range between 265 and 267. We got the bounce out of Amazon. We had talked about this 38% fib pullback, consolidation here at 3,400. We got a gap up, gave about half back, and then finished on the highs at 3440, 3450-ish. Yeah, 3443. What we want to see today is a breakout here and then targeting a move up towards this 34.90 where there was this resistance. But I want to see Amazon get on track. Why? Well, because I'm long XLY is one reason, and it's 24% of that index. So that's a self-serving statement. But I want to see mega cap tech participate across the board. And Amazon is such a big company. I don't, if it's selling off, it doesn't look good, doesn't bode well, and it speaks to some other issue going on. I think this was just a technical correction. What I want to see happen now is grind back to those prior highs, and then, of course, break out of this huge range and head towards 4,000. You can see here this rejection. Just technically, that's not what you want to see. Rejection, 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 rejection. It's got to power out right here, or else we start looking to the downside, 32.50 and then 29.50 if everything falls apart. But this is the time where it's got to break out, or like I said, this whole thing is going to roll over. Google, nice day. Got a candle, big candle, closing candle, probably in sympathy with Facebook. I guess the FTC has also got stuff going on with Google. So having that case dismissed against Facebook was, sympathy play positive here. Still want to see 24.50 taken out. And if it does, you can be long and look for 2,500. Has not been able to do it yet. Hasn't done anything wrong technically, not even pulling back, but just hasn't had the horsepower to break through 24.50 yet. And I want to see that happen. And then that would be a great place to be long Google. Netflix, made a move up to this 32.50 resistance. Had a little trouble there. What I'm hoping for is an impulsive move higher now. I'm still long, but I'm not going to be able to, twiddle my thumbs while Netflix decides to go sideways the rest of the week. I've got to see a constant push higher just because of the short-dated nature of my calls. So I'm probably break even, maybe a little bit underwater here. So I'm going to want to see 532.50 taken out, and that should open the door up to the 540s. Semi's great day yesterday. We talked about this. We talked about the $10 consolidation range. Hopefully you had 256 alarmed like we talked about. You got the alarm right out of the gate, and it really never looked back. So now I've scratched in a little support shelf here at 259. As long as it holds 259, I think it bodes well for a push towards 260, and then 266 would be your measured move coming out of this $10 consolidation. $10 added onto the breakout is 266. I think it looks good. If you lose 259, you could see a pullback, into 257.50 or even 256. If you miss the whole thing, if this is your first day here and you missed it and you get a pullback to 256, you got to hit it long there because you've got all this area down here as support. So that would be a second bite at the apple, as it were, right here, back at support or back test of the breakout. Running through some trades that we have on. CrowdStrike is flagging. You can see after this big impulsive move, we've had a week of consolidation above the prior all-time highs. So that bodes really, really well, because if it can break from this flag, it's got basically an open path towards this 285 measured move that we've had on this cup and handle breakout. So stay long against 250 for sure, and I would have a stop just below that in case the market wobbles here. Costco, we got this breakout here at 387.50. It's not setting the world on fire. That's one of those, cyclical type names, but it is moving higher, and there's nothing wrong technically. We got the PPO bull cross, and we got positive RSI working. So as long as price keeps going up, no reason to exit. I've been messing around with AMD a little bit. Got a rising channel here on the 1 hour, currently being pinned down by the midpoint of the channel. What I'm hoping for is to make a run from 87, break above this midpoint line, and then make a run to the top of the channel. Here, what did I do? Here's the daily. If you're on the daily, you haven't missed anything. If you get a breakout here above 87.50, I think you can get long here for a run towards 90 and even 94 on the upside if we get that breakout. And looking even bigger picture, you can envision this 74 to 87 as a consolidation range. And so if we get a breakout, what is that? $13. So 13 added on to 87 takes it to 100, which is back at the highs of 98. So if we get a breakout here above 87, I think that would be a nice trade. Or we just went over the basket, SMH. It's perfectly fine to play that as well. We had CVS as a trade idea. It's a defensive cyclical name. It's not going to perform when tech is running. Nothing bad has happened. I think you stay long against 83 and the 50-day moving average at 82.86 with a stop just below, because what's going to happen is if interest rates pop up, tech's not going to do well, and then all these names will do well, like Costco and CVS. Pins. We've been in this for the gap fill. We got it. What I want you to do now, as we've discussed in prior days, make sure you roll up, whether you roll up to the 80 strike and take full profits, or if you want to leave a little more delta, you can roll up to the 77.50s or the closest one that you see on the option chain. But all systems go for a run to 86 here. Not a whole lot in the way. I mean, this was the big resistance layer here at 77. So I think that looks good. PayPal looks good. We were looking for 300. We're on the doorstep of that after this breakout from 275. Stay long, especially as long as price stays above the 8-day here in pink. You may see resistance at the prior all-time high at 305. So if you had been in PayPal since the breakout and you got a $25, $30 move up to 305, I would certainly be looking to roll up and get paid for that. You can't just sit there with $25 of embedded gains in an option and wait for a rug pull to take half of it away. So when you get deep in the money like that, roll up and stay ahead of it. And then when you get that red bar that always happens, you've already got most of your gains in the bank. I don't know what was wrong with Snap yesterday. It was down 2%. No idea. Didn't see any news, but technically nothing wrong. If you're not in and you got to pull back to 64, I wouldn't hesitate to go long with the stop just below. But if you're in this breakout, no damage yet. We're still above the 8-day, so hard to get too bearish with that particular setup. Twilio. Talked about this breakout here from the downtrend line. We talked about option traders looking for 400. That's what we were looking for as well. On the doorstep, if you get up here to 400 and you want to stay long, roll up your strikes, roll up your stops, get long at 400, and then look for 440 if everything keeps rolling. And then Carvana, we were talking about. Fake breakout, pull back to the top of this trading range. We got the reaction that we had talked about. If you took it long here and you've got a stop just below at say 295, you're looking good and you got exactly what you expected. Now the trick is to get a breakout above 315 that sticks. And if that happens, even if you're not in it, I think that would be a good trade to take on the 315 breakout to new highs after a peak above, a back test, and then go. But you got to have a stop at 295, and if it breaks that, get out of the way. Last slide. Bitcoin. Grayscale Trust. We've got a falling wedge here. You can see the downtrend line. You can see this wedge bottom. Also note the bullish divergence. Why? At this point here was a low in PPO and a low in RSI when price was here. But now price went lower, but at higher PPO and higher RSI. So there's some buying pressure building under the surface, but below this downtrend line means price is still in the downtrend. It needs to break out of here, and then you've got overhead resistance levels at the 200 here at about 32.88 right here. That'll be a problem. And you've also got the declining 50 right here at 35. That'll be a problem. But if you got a long-term horizon and you want to be in Bitcoin, wait for this breakout here above the falling wedge and see if you can get a run back up towards 40. 35 or 40 would be my guess. As first targets on a breakout of this bullish falling wedge. So, all right, let's wrap it up there. A lot of information. If tech starts working today and you want extra beta, NEO, what are some of the other EV names? Anyhow, EV, solar. Some SPACs are starting to work. If you're looking for, adventure and higher beta in those names, they've been working. So if you see tech start to work, you can gravitate to those names. Also, I think mega cap tech is going to continue to work. So let's see what happens today. If you're new to the channel, please hit the subscribe button and the alarm bell. I'll do my best to keep you loaded with actionable information, not only for active traders with the key levels and pivots on the indexes and FATMAAN, but also swing trading ideas that you can take a longer term time frame. And if you look over in the show notes, you'll see links both to the blog site and how to register for all my content. That way, during the day, after hours, on weekends, you'll get a nice, neat email right in your mailbox. You won't have to hunt for my content. That is always a convenient thing. And then you'll get an invite to the trading room. For the rest of you that continue to hang with me, I hope you're trading well. I hope the information is helping you. Do me a favor, spread the word, pass the link along to your trading network, to your social media. I really appreciate that. Help me build the channel and grow our community. So this has been Chris Butts with Traders Profit Compass. Have a good day of trading. Talk to you next time.